Hmm. Hmm. Hey, what's going on? Chase here at Everbullish, also known as the Stock Sherpa on YouTube. It's Thursday the 15th, April 15th. It's tax day, or what used to be known as tax day. The last couple of years, that date has changed quite a bit. But anyway, I'm coming to you here from the Hill Country. It's a little rainy outside. The market's already closed, but I wanted to make a video talking about IPOs and talking about Coinbase. And that song that I started with there was Hypnotized by Notorious B.I.G. 2005. Whoever's leaving the comments about my poor taste in music and opening up a trading video with a 20-year-old song, you can suck it. I don't care. And this is a great song. And another reason that I chose that, other than it was the first one that came up, is that I think a lot of people are getting hypnotized by IPOs. So Coinbase IPO'd 2 days ago. I am having a lot of less than sophisticated investors asking me whether or not it's a good buy, or whether or not they should be trading it. I'm going to give you all those thoughts in this video. I've also got an analogy I'm going to try to work through. I haven't really thought through this too much, but I think it's a good way if you're an advisor or if you're a sophisticated investor, or anywhere in between, that you might be able to kind of understand the difference between IPOs through an investment bank and other ways to bring a company to an offering. I want to keep these short as I've been getting that feedback and continuing through to you guys. So no more rambling. Let's get right to it. I'm going to go to fidelity.com, which you all know is my broker of choice. We're going to quote Coinbase. Coinbase, C-O-I-N. Pretty awesome that name wasn't taken. I couldn't believe it. But the ticker symbol is C-O-I-N, and it is listed on the New York, obviously. And so let's just talk about this. Let's talk about how this works, because it's kind of a dual part thing. Coinbase is a digital wallet. A couple of videos back, I talked about digital wallets, the difference between that and actually trading platforms. But it's a company that I've been familiar with probably since 2013 or 14. And my buddy Josh, who's kind of my crypto go-to, told me about him. I told him I just wanted to buy some Ethereum and some Bitcoin, and I wasn't sure how to do it, even though I was a broker and I consider myself a financial maven of sorts. Yeah, he just told me download it. Back then you could use your credit card, so you could max out your credit card, throw it on there, and then make your money in Bitcoin and take it out. So anyway, this is the way you buy different currencies, store different currencies, and then actually they allow you to purchase, whoever allows you to purchase using said currency, you can do so inside of the app. So it's in a tremendous space. I'm sure it's going to continue to be the forefront company to be used as far as digital wallets. But I have some concerns, and my concerns are not necessarily even with the company. It's more about investors themselves jumping in at the wrong time. So I'm going to get to that now, I guess. I like to use, here's the analogy that I've been thinking about all day, and I wanted to put on video here for you guys, is I have this guilty pleasure of watching TV shows on the Discovery Channel about, I think it's called Meekum Auto Auctions. Maybe it's on the Motor Trend channel, but it's these white trash auto auctions where somebody comes in with a classic car and they go, oh, we're gonna start the bidding at $1 million. And you know, this classic Ferrari that there are only 10 of, and they haven't sold one in many years, comes up, and it's basically the auction's job to sex up the car. They gotta make it, they gotta figure out what price they're gonna charge for it, and they gotta make sure that they have the right buyers in the audience. See where I'm going with this? To get the best price, because remember that the auction house gets 10%, so 10% of $1.1 million is 100 grand more than 10% of $1 million, right? So 100,000. But you're with me here. So the slice of the pie is bigger for them because the slice of the pie is set as a percentage of what they sell the car for. The same is true of investment banks. So Goldman, Morgan Stanley, Who else? Deutsche, Royal Bank of Canada is a big time player as an investment bank when it comes to IPOs, but Goldman's always been and always will be the gold standard in my opinion. So anyway, what happens is a company like Coinbase and these guys that started this and have grown this company decide that they want to punch the ticket, right? They want to list and they want to get paid out. They want to get paid in the shade, relax in the Bahamas, buy the yacht, spend a couple months in Macau and in Vegas and just blow that money and have a good time and eat lobster and turtle soup tonight for those guys. So they go to an investment bank, and in this case it's Goldman, it looks like. There's probably a joint venture here, but they say, all right, here's my financials, here's my book, here's everything that we do. Go ahead and put a value on us. Very similar to that Ferrari that I mentioned going to the Mecum auto auctions. And their job is to go through it. And if it's the Ferrari we're talking about, you got to find the provenance. You got to find all the numbers on it. You got to look through the history of who owns it, how many are left, how many are for sale. And then you start a price that you're going to ask for to start the bidding, knowing darn well that within that price, there's the 10% that the auction house is going to get, right? So instead of offering it at what it's really worth, they offer it a little bit above that. That same thing happens with investment banks, guys. And I know that you know that, and I don't mean to speak down on anybody on this channel, but I think it's important to remember always that the table is tilted away from you as a retail investor. So they're punching the ticket the second the first bid goes up, just like when you're watching my silly TV show. The auction knows it's in the money the second the first bid goes up. And then now it's not their fault or their problem to deal with. Now it's all gravy, baby. Now it's the guy in Arizona and the guy on his yacht in the Florida Keys that are going against it, driving up the price of said Ferrari. Coinbase is the Ferrari. Goldman is the auction house. I could keep this kind of silly allusion or metaphor that I have going on with the auction house versus the investment bank, but I think it's a cool way to look for it. If you're an advisor following my channel, it's a good way to explain to your clients what's really happening. One other real quick note is just that, especially when I was working in the industry, we all hated the days that there was a big IPO, because your clients that had 100 grand with you would call you and say, I want to get me some of that Facebook, or I want to get me some of that Snowflake, or I want to get me some of that Snapchat. You're not going to get it, man. It is possible if you have, let's say, 5 million to 20 million with a firm and you have money outside somewhere else. Let's say you had 2 accounts of $20 million and you're a CFO somewhere and you got it at Goldman Sachs and you got it at Fidelity. Well, whichever company is going to give you the during the indication period is going to give you your allotment of the pre-IPO shares, probably going to be the one that's going to win that account from the other firm. Same thing is what's going on with all of these investment banks, and that's the only way you can really get your hands on any shares. I personally, obviously, I'd take it if I could have got them prescribed to me at 250, and now it's selling at 322, and at one point it was at almost 430 in 2 days. That's great. My point here is that the investment banks are out, the founders are out, it's gravy for everybody. But no one knows what this is really worth. There aren't any other wallets out there being traded that I know of or care to know of. And there's only 2 days worth of price action on it, and it's been pretty wild. Got it pulled up at the screen here, but it just doesn't make sense for me as an investor or trader to try to follow the square trade, the popular trade, and just get lucky on a pop. I mean, let's remember, we're not flipping coins here. There are a lot of other stocks out there that are just more reliable for an overnight return, if that's what you're trying to get, or a weekly return or a monthly return. And if you follow Everbullish.com, you've been following those and kind of seeing more of the process. But even deeper than that, guys, no one said that you can't put a 90-day limit order. Let's say I think it's going to drop below 300 tomorrow. I've got a good feeling about that. Even with Kathy Wood of ARK Investments, buying 300 million for her funds today. I haven't looked at the entry sheet, so I'm not certain that that's true, but I saw it on Twitter from a pretty reliable source, and after this video I will go check that. But I want to put that out there that I'm watching this all the time, and I'm watching this for you. But even with all that, I genuinely believe this is going to go below 320 and probably settle somewhere around, let's call it 300. I think it's going to go below, and my Sherpa prediction of the week or of the weekend is that it'll probably settle out somewhere around 280. So if I was going to buy this, which I'm not, if I was going to buy this, I would buy this around 280 or not at all. So go ahead if you want a piece of this action. There's going to be years and years and years for us to trade this, but I think it's too risky to buy IPOs right out of the gate like this. And sometimes you get lucky, and lately they've been getting lucky and they've never been going below what their initial offering price was. But I don't see that with this one. So just beware. And I also just like making predictions and calls, and also like being able to give you guys the information that I have. So that's all I really got for today. Final one little piece is, if you've been following me, you probably have noticed that I talk a lot about a pattern that happens over the weekend, which is just that Bitcoin goes up over the weekend. Today's Thursday. I have a little note on my calendar. If GBTC, the Grayscale Bitcoin Trust, is either flat or down tomorrow, I'll throw an order in and pick up some shares and then sell them on Tuesday. Just because there seems to be a nice pattern there. You can pick up, let's say, 5 to 8% on a 3-day trade. It's not really a swing trade. There's not a lot of thought behind it. It's not a macro trade. My nose is itching from all the allergies here. Sorry about that. But it's not a macro trade. It's really just a simple, easy pattern that I'm following. And one of my biggest trading rules, as you all know, is let it be easy. Let it be an easy trade. So that's my prediction. I'm going with it. Chase at Everbullish, the Stock Sherpa on YouTube, free newsletter, everbullish.com. Love helping you guys. Please leave comments. If you'd like, give it a like. Love it if you gave it a subscribe. Share it with a friend, neighbor, or stranger. Keep following. Let's get rich.